Wonderful good evening all together. What a great pleasure to have you in this webinar and to have this webinar especially and basically, and thanks to my colleague from Admiral Markets for opening this webinar. Good evening, audio and video are okay. So I will try to open my video cam because you have to know I'm in Bob High. You can see it. I'm in a hotel because I'm in Frankfurt, so you can see me here right now, I guess. I hope your internet connection will be stable during our webinar. If not, then I have to close the video cam, and so you can hear my voice. Master the markets, our topic for Wednesday evening. Welcome to this wonderful webinar. I'm so happy to have you in this webinar. You know, my English is German style, but I hope you can understand me. I make a lot of efforts to be better and getting better from week to week. And it's a great opportunity to learn and sound gone after welcome. Okay, let's see. So I guess I have to close. So you see it's better now. Do you have an audio right now? Let me know. Okay, now. Okay. So what I told you, the video, the webcam takes too much traffic, so I have to close it. So only my voice today. I hope it's okay for you, but I guess you know how I look like. How I look like, so you know it, and my voice is so much more important than my face. So I hope you're doing good and you had a great week up to now. So start with our webinar. We have 45 minutes roundabout, maybe 50. It's up to you. And yes, master the markets. Let's start with the first slide. You know, risk disclaimer. Everybody's responsible for its own trading. We use demo accounts in our webinar because this is a restriction about the ESMA, and therefore please take into consideration that the information in this session may not be suitable for everyone. For every other information, please use admiralmarketsglobal.com. If you are a starter, please be careful and be able and aware that you use a demo account first. Till that time you are stable in your trading. That's my advice for you as well. Since August 2018, we have the regulation about the European Union, and we have to make differentiation. We have differs between retail clients and professional clients, and as I told you, we use demo trading accounts. That's the big challenge. For ESMA, we had a margin about 600 in DAX 30. Now we have to use 3,333 euros as a margin, but you can choose, and we have this restrictions up to maximum 1 to 30 and 1 to 20. So that was too fast. That's your options. You can choose between retail clients and professional clients. It's your choice. And let me tell you something, guys. I'm so happy that you are here in that webinar. It's your webinar. I am only a coach. I'm not important at that point. I only want to tell you what I figured out in trading. If you have questions, if you have wishes, if you have some critical things to me, let me know. We can talk about everything, but not about my weight. That's forbidden. But unless otherwise, you can. On the other hand, we can talk about everything. So that's why we have to choose Admiral Markets, because we have the best index offerings, Index 30 and CFD mini contracts and so on, and of course, no minimum stop distances. That's really important. Admiral Market is one global player. It's a global player. You can have your branch wherever you are, not only in Germany or in England. So you can choose it in Cyprus, in Australia, wherever you want. Guys, that is the first and the most important slide. You know, success is not a fantasy. It's your formula. formula, and I always start with that slide because this is the trading approach you have to burn into your mind, in your brain, because this is one of the easiest trading approaches ever. Why? It's based on the easiest tenets of Charles Dow. A trend continuation is always more likely than a trend break, and the experienced traders always make their trading their trades outside of the correction zone. It's called the accumulation phase. So therefore, we have a probability of almost 72%, between 64 and 72%. It's enough to be successful in trading. The most important challenge is taking place in your mind. So you can have a probability, you can use a trading approach which maybe 80 or 90% of hit quote are probabilities, but if you are not able to stick to your rules, you will lost your money in trading. And that's my job as your coach, as a leading guide here, that I can help you to stick to your rules. And that's one of the most important things in my trading community called How Trading. If you want, you can visit my homepage, dowhow-trading.com, and switch to the English version there. There you will find a lot of other information. My job, I'm not better than you. I am not smarter than you. Of course not. I guess a lot of guys from you here are more smarter than me. For successful trading, you must be clever. And clever means take it as easy, the KISS system. Keep it simple and stupid. And this is one of the simplest trading approaches ever. Identify your trend, identify your correction zone, and then push the button and let the market decide how much money you will get. Okay, we have some other information, market profile, and today we have a little bit of education in that, and it was a special wishes from a wonderful person in my life for, since a couple of days. I want to show you the basic of the Fibonacci retracement and how we use it in our How Fiber Pro system, and I want to show you why we use it and how you can use it in a very successful way in combination with our How system, trading in the accumulation phase. And that's the difference between 65 and 72% is if you make sure that the higher trend or that higher time frame gives you a support, then you have the higher probabilities of 72%. So for the higher time frame, in our trading, we use the signal chart is hourly chart and the big picture is daily chart. There we use 3 templates to use it as a support. So the first one is you see in daily chart trend as itself, and we can make a trade in the smaller time frame with the support of the trend outcoming of its own correction zone in daily chart. That's the first template. The second template is you see in the daily chart, you see a divergence, maybe on the lower side or the upper side is the same. You see in chart, it's a lower low and a higher low in the RSI. That means you have a divergence. It's one of the most powerful technical signals in chart or in trading, which means you can make in hourly chart a corrective up trade based on our rules, of course. That's the second template. The third template we use, it's very simple. We can see very close the current price, support or resist. That's the 3 templates, and that's the reason why we start to look in the chart, in the daily chart first, and only if we can see there one of that 3 templates, we can have a look at the hourly chart. We can say if we don't have a look at the hourly chart, if we don't have one of the 3 templates, it's wasting of time because I want to use 72% of probabilities, 65, it's not enough for me. You can do whatever you want. So, and now that's the rules. That's the rules in my trading. I force my clients to stick to the rules every time. Otherwise, I will hurt them and will push them with some other things as long as they stick to the rules every time. I'm a really strictly coach, and I can tell you the reason for that. Why I am so strictly as a coach, I guess. And I don't get. I'm sure. I'm absolutely sure we don't have to waste time, lifetime, and money. Not me and not you, of course not. That's the reason why I'm so strictly as a coach that my clients and my students are stick to the rules every time. So rule number 5 to 7 is the big where I am in the chart, outside, of course, of the correction zone. This is absolutely it's absolutely valid for the signal chart and for the big picture as well. The big picture, the 3 templates must be outside of the fair value zone. Only this exception, we have a price at the point of control, high or low. And rule number 6 shows us the targets like Fibonacci. This is one of our education parts today. And as I said, 3 templates in our big picture. Rule number 1 to 4. Rule number 1 to 4 is how do I make my trade? How can I go inside of my trade? So first of all, you need a trend. No trend, no trade. Really easy. No trend, no trade. Second one, maturity of the trend. We need a young trend, not more than 4 trend arms. And the next one, rule number 3, is really important. We need a correction. We want to make trades in the accumulation phase. That means we have to wait for the correction zone, and the correction has to run at least 38% of Fibonacci, measured on the movement. And rule number 4, if we have a price in the correction zone, wait for the rebound. And you can see it by Heikin Ashi, by the balance candle. So more information, it's depending from my education in my family. By the way, many complex for using Heikin Ashi Vincenzo. One of the few indicators that has given me good result. Okay, that's great. Yes, I use it. I call Vincenzo. I see the same because I think trading as itself must be as easy as possible. Because the higher challenge is taking place in our mind to stick to the rules every time, even you have a drawdown phase and so on. So that's the reason I'm a really easy guy, and trading must be as easy as possible. So switch to that was the wrong way. So sorry. Just a moment, please. So there, here we are. So transactions. So here we go. Okay. So first of all, I had a stop, I had a loss, and I had a loser in Aussie New Zealand dollar, because you saw there we had our trade at that point here. It's a couple of weeks ago, and now we have a long sideways phase. And yesterday I was stopped out. I was stopped out here. That one of the losers, very seldom case, but it's a part of the game. It was a calculated stop, and it was a calculated loss. Yes, a calculated loser. So it's part of the game. You could see my I made a mistake because my first target would be filled there at the point of control, but to be honest, I wasn't at the screen at that moment. And the second time I left, I missed it again. So it was my fault. It was my mistake. Otherwise, I had a part-time, or I sold the half the position when I reached my first target about Fibonacci, and then the rest would be stopped out here. But in that case, it was the full position. So no matter, I don't care about that because it's a part of the game. everyone. And you see, I made mistakes. That's the same. I make my own mistakes, but at that moment, I calculated my stop and I calculated my money management. I don't care about it. It's only one trade, and tomorrow I have forgotten it, and tomorrow I will forget it, and it's not really important. How do I get the template with point of control, please? The template, the point of control, I can give you just a moment. I can give you the link. So just a moment. Then I give you the link to the market profile. And of course, so here we are. So how and English version. So here we are. There is the link. I will give you the link. Then you can order your own indicator. So in the chat box, you find now the link to the market profile. Why didn't you put a pending order at your target? Jack, to be honest, I forgot. Really, I've forgotten. I have trades on six MetaTraders at the same time, 6 platforms at the same time, and I have so many to do with education and coaching my people, and it's too easy. I've forgotten. It's really easy. It's my fault. It's bad, but it's sometimes it happens. So shit happens, I would say. I'm always honest, so I've really forgotten. Okay, so but I have a still working trade in Aussie. Just a moment. So we see Aussie Swiss franc. You see the Swiss franc. This is my trading approach. You see it's a trade in daily chart. We have this trend here right now. We have the correction. We saw this correction at this balance candle here. You see, I always stick to my rules and never break my rules. Never, 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 never. Because I'm so far away from trading, from emotionally trading. But to be honest, I make this job since 20 years right now. And but it's a kind of education, and it's a question of time. Everyone is able to learn it, and I will try to figure out to guide you there to learn especially that kind of trading. So a little bit in the loss at the moment, but as long as we don't see the close below this 0.3, and there's the stop, there's placed the stop here. I have the probabilities that the trend continuation to the upper side is more likely than a trend break. What is the balanced candle, please? A balanced candle is one of the 2 candles in Heikin Ashi. A balanced candle means you have a really small body and a shadow on the upper and the lower side, and the other one is a trend continuation candle if you have a big body and one shadow on the upper or the lower side. But this is a little bit more education. It's not part of that webinar, but it's easy, Robert. It's really easy. You can Google it and say, you see it. A balanced candle means always you have, so here we are. So maybe that you see it's a small body and a shadow on the upper side, or a spike on the upper side and the lower side at the same time. This means the wording balanced candle, because you see it's a balance from supply and demand. If you have a strong and a powerful and a big body and a shadow on the upper side, this means a trend continuation candle. That means the trend is intact and very strong, and you see the next movement is working here right now. That's the difference between those 2 kinds of candles. So let's make our working style and let's figure out what we can make trades this week. Let's start with Aussie Canadian dollar, and always we have to look first at the daily chart, and so you can see first of all where we are. So Aussie Canadian dollar, you see first of all we are in a green zone, far away from the point of control. So we don't have a trend to the upper side, so no first template. We don't have any divergences here. Second template missed as well. But I guess we have here a great support here and that zone here, and that means we can have a look at the hourly chart. to go up back to the point of control. So switch to the hourly chart here, and now you can see it's forbidden. Why? Because we are among the red zone. First of all, you don't have a trend because you will want to go long based on the daily chart. So no trading chance because, first of all, you don't have a trend, no trade, and additionally, you are among the red zone at the fair price, really close to the point of control, so no trading chance. Go on, and let's use the next one, Aussie Japanese yen. The same thing, the same situation. You see it here. First of all, in that case, first of all, you see a trend. Movement, correction, let's see here. Movement, correction, and now we are still in the correction, and as long as you don't have a close below this 0.3, this last point, this last low here, a trend continuation is always more likely than a trend break. Trust the trend, guys. Trust the trend always. And if we don't have a trend continuation, it's a part of the game. Then the market decides, but not you and not me. So switch to so we have first template, we have a trend, and we can make a trade out of the accumulation phase. So switch to the hourly chart. Let's see where we are. So first of all, based on daily chart, we are thinking long, of course. And now in hourly chart, you see, we have a short trend, and additionally, we are in a red zone. No trade, it's an absolutely no-go. Don't waste your time with such charts. Go on. Aussie New Zealand dollar, same procedure as Aussie Canadian dollar. You see, we have we don't have an uptrend because we always don't want to go back to the point of control. That's the sense behind that kind of trading. You see, do you have a fair price or an unfair price? And every price has the behavior to go back to its own fair price in trading as well than in life as well. So you don't make a trade in Aussie New Zealand dollar because you trade prices, always prices. So the underlying is, I don't care about the underlying because I trade prices, and the price has always the behavior to go back to the point of control, to the fairest price. That's the thing about in trading. So trading at itself is not rocket science. Take care about the trend and the price. That's all. No indicators, no something else. Only that two things: trend and price. No more, no less. So we see our third template. We see a great support here. And maybe that means, Siri, come on, shut up. And we see this support here. That means you can think about a trade, long trade, of course, long trade in hourly chart. And we see, first of all, that's good. We are in a green zone, means we have an unfair value price right now. So the probabilities are more on the higher side, because we want to go back to the point of control. In Aussie Swiss franc, it's placed at roundabout with 1,440 bars at 1.04. So that means now, that's important, we are in a green zone, we want to go back, we have the support about the daily chart. That means now our rules are important. Can you remember the rules? Let's do it together. Maybe you know it. First rule, we need a trend. Do we have a trend? No, we don't. So we have to wait. Then, if we assume we will have a trend, we need a correction, at least 38%. Then we need the balance candle, and then we can make a trade. So that means for us, take that trade or this underlying on your watch list, Aussie New Zealand dollar. If you use my expert advisor like me, I put it on, and now, not this one, sorry, this one. And now I have my expert advisor, and the expert advisor translate my rules into an automatism, trend, correction, balance candle, Fibonacci, and go on. So put it on your watch list, Aussie New Zealand dollar for that week. It's a really, really important. Maybe we have a loss there. Okay, it was a loser, but we have to know. It's a duty. As long as the setup is valid, we have the damn duty to try it again. As long as the rules fit and as long as we have this set up by the big picture. Next one, Aussie against US dollar. Daily chart at first. You see, we have a falling price in Aussie, very strong US dollar. But first of all, we are in a green zone. That's positive. Next one, we don't have a trend. We don't have divergence. That means we can use this support here. And if we see a stabilization at this area here, we can think in a chart, in hourly chart as well. And you see, first of all, very positive. We are in a green zone and we want to go back to the point of control. That means put it on your watch list. When we see our rules there, trend, correction, 38%, then the balance candle, then make your trend. That means I say to my expert advisor, if you will see here the rules, make a trend. If you don't use my expert advisor, please make it by yourself. It's easy. It's hourly chart. No hurry. No hurry in that way. I guess we will see a chance maybe tomorrow or Friday or maybe on Monday. I don't know. But put it on your watch list. It can happen faster than you think. Next one, Canadian dollar, Swiss franc. Daily chart. First of all, daily chart. So, absolutely no go. Why? You are among the red zone. Forget it. Next one. Canadian dollar, Japanese yen. Same procedure. And this is very difficult. This is very, very difficult. And this is a real challenge. Someone is calling me and someone is asking me, Markus, I have a trend here right now. And we are in a correction zone right now. And maybe we will see here a balance candle in daily chart. I can use it in hourly chart. And I say, no. Why? Do you know the no-go? We are among the red zone. That means we still have a fair price right now. So the probabilities are very, very less that we will see a trend continuation because we were already at the point of control and now we are in the correction, but we are among the red zone. I know, guys, I know. It's really hard to accept. That's the reason why you can read on my homepage, accept the inevitable things. And this is one of the inevitable things. If the rule doesn't fit, don't make a trade. Forget it. Even it looks like so beautiful. Next one, Swiss franc, Japanese yen. Same procedure. Among the red zone, forget it. DAX 30. Among the red zone, forget it. Unless we will see a falling price and we will see the next price at the point of low. Then we can think about the next trade. Not yet, forget it. Euro is really difficult this week because we're expecting tomorrow the rate decision from the ECB, and we are in the red zone. Forget it. Euro Canadian dollar, exactly at the point of control. No chance right now. Euro Swiss franc, you see very close to the point of control, sideways phase. It's a characteristicum. It's characteristically for the red zone for the fairest price. Forget it. British pound or Euro British pound. Here we see another situation. First of all, you see a downtrend, but we are in the green zone, and green zone means we can think about a long trade back in the green red zone, back to the point of control, and now we can see a little bit stabilization here. That means we can think about a long trade in hourly chart. So where we are there? Great. Look here. We are in a green zone. Point of control is very far away. What a great system. What a great opportunity. But we have to wait to stick to the rules. First of all, let's see. Do we have a trend already? Let's see. Come on. You see movement, correction. Just come on. Here we are. Movement. Then you see the move to the other side. Then the next correction here. The next movement. Remember it about the trend you see. Now we have the correction, and look at this one. Look at this one. Here we have our balance candle. Look at this one. So now we use Fibonacci. We measured here. Here we are. We measured the last movement. Come on. Here we are. We see, look at this one. 61% Fibonacci. Almost exactly, or a little bit deeper, 78. That means the first targets were placed here at 80%, 27% on the higher side. And now we'll say, okay, let's make a trade. And I say, no. Why do you think I say no? It's one of the inevitable things. Guys, tomorrow at 1 p.m., we're expecting the rate decision of the ECB. And an hour later in the evening, we're expecting the rate decision from the Bank of England. We are expecting a lot of volatility. No trade in that way, because such high volatility will destroy our targets. That is a risk I want to take over. So put it on your watch list. Maybe we will have a chance on Friday or on Thursday evening when the rate decisions are over, and then we can think about it. But basically, make a screenshot of that. Make a screenshot of that. That's one of the templates. That's one of the best things you can use in trading. You have the correction down to 78 or 61. You see the balance candle, and then you can make a stop buy order, and you can make your trade to the upper side. So guys, that was we have to stop here because I want to tell you something really important about Fibonacci, because I know all the other one. I know all the other currencies. There is no more chances there because I prepared it before I opened this webinar. I know that's enough for this week. Let me show you, please, and please don't quit this webinar right now. Please stay to the end because it's really, really important. You know, I use Fibonacci. Why? Fibonacci is based on the tenets and the discovery from Leonardo da Pisa in his book Liber Abace. And you know, 1 and 1 is 2, 1 and 2 is 3, 5, 8, and so on and so on. It's a human mathematic role. And people are used to be human. So, and that's the reason why so many people around the world use Fibonacci. And I will show you how big or how strong Fibonacci is in trading as itself. How strong, how big is the impact of Fibonacci and trading? So let me draw it for you. Let's see. I have to use this one, so it's a little bit easier for me. So let's see here. Okay, first of all, I have to choose here. So let's see. Okay, first of all, I want to show you this one. You know, education, guys. You know, always, we have a trend in trading. Movement, correction, movement, correction, movement, correction, and so on, and so on, and so on. Why? A trend, guys, is based on movement and correction. Movement and correction is based on supply and demand. People people sell, and people buy. If you have more buyers than sellers, the price is rising up. If you have more sellers than buyers, you have a decreasing price, and so on and so on. Here we have our accumulation phase. Here, that's the accumulation phase, always there in the correction. That's accumulation phase. Then you see progression phase. That's the progression phase, always. That's progression phase. Always before the point 2 will reach here. And above of that, above of the point 2, we have the distribution phase, always. Above the point 2, distribution phase, always distribution phase. Only unexperienced traders make trades there. And they are wondering why the price will falling when they go inside of the market. It's the distribution phase. We make trades in accumulation phase, because you know a trend continuation above in this long trend is always more likely than a trend break. I showed you the probabilities of 65 to 70%. So, and now it's really, really interesting. I will prove it. I will bring you the proof in the chart. This is the education, and you can see the price always. You have to measure the Fibonacci movements 100%, and then you can measure how deep is the correction. And the really healthy correction ends latest at the 61% of Fibonacci. It's okay if we have a deeper price at 78 or 86. 100%, it's not more healthy, I say in my wording. So the best corrections are will see an end at the 61, and always you make your measure you measure the last movement from the last correction point up to the last point 2 or the last high. Then you can see, okay, 50%. And now, with this information, we can figure out where is our target. And that point brings you a lot of calm in your trading. Because let me tell you a story. In my career, in my trading career, how it's called, what a shit. In my trading career, it was one of the most important challenges to figure out where is my target. I always know where is my stop. Okay, my stop, I know, is always below the last 0.3. Always the last 0.3. Because if we will have a close below the last 0.3 or the last correction point, the trend is over. And I am a trend trader. So if I have a close below the last 0.3, maybe here, then the setup is destroyed. The trend is no more valid. It's over. So I always knew where I have to where I have to set up, where I have to set my stop. It's easy, but it was a real challenge. Where is my fucking target? Should I make a movement? Should I trade the trend, or should I trade a breakout? And then comes Fibonacci in my mind, because my mentor told me, don't be so stupid. Keep it simple and stupid. Use Fibonacci. It's a humanity. It's a human part of trading, because you can see the deepness of the correction, and with that information, you know immediately where is your target, your first target, and the rest the market decide how much money you will get by the trend. So that's the reason why I always say, if you have a correction which ends at the red zone, maybe 38, 50, or 61, the first target is placed at the red extended version of Fibonacci. That means red to red. If you have a deeper correction, maybe 78, it's the blue line. Your target, your first target is placed at the blue line on the upper side in a long trend. It's the opposite direction if you have a short trend. Of course, that's, I guess, it's understandable for you. And if you have a correction which ends at the 68% green line, then the first target is at the green line. But where is the benefit? Where's the advantage if you use two targets? First of all, you will have a good feeling. If you reach your first target, you can take out the first half of the position and you are risk-free. That's so important. That brings so much calm in your trading, guys. You underestimate that point. I underestimated that point so many and so often in my life. And since I know that, since I use that point, I'm so calm in my trading since years right now. And my guys in my community as well. Guys, 80% of my clients were successful in the last year. 80%. The reason is they stick to the rules every time. And they use that Fibonacci rules. Red to red, blue to blue, and green to green. Unfortunately, in MetaTrader, you cannot use that colors, but you can use the numbers. Maybe it's the same. It's easier for me. I love to work with colors, and in this software I can use it. But it doesn't matter. You can use the numbers in the MetaTrader. So let's figure out in the chart. Is that for you understandable? Please give me a short note in the chat box. If you understand why we use Fibonacci, type it in chat box, yes or no, yes or no, yes or no. Bob says yes. Christine. Okay, great. So stop loss on the previous 0.3 or the 0.3 under accumulation. No, always the previous, Christine. Always the stop. If you go inside in the trade, maybe here after that correction, your stop is always placed at the previous 0.3, because this 0.3 here, where is my mouse placed there currently, is the 0.3 with a question sign. But the 0.3 is only valid if you have a trend continuation. As long as you don't have a trend continuation, this is the 0.3 with question sign. The valid 0.3 is the previous 0.3. So the price or the stop must be placed under the previous 0.3. That's really important, because the reason is the correction can be placed a little bit brighter here, a bit larger, but without trend break. That's the reason why you have to place the stop below the previous 0.3. So thanks for your information. Now switch to the chart. Now it's really, really interesting. It's so interesting, and you will see it. So let's see. Let's start here. I will draw it for you. So let's see. Okay. First of all, guys, we always have to wait. So I hope it's okay for you that we extend this webinar a little bit a couple of minutes ago, because I want to finish this. Is it okay for you? Type it please in the chat box, yes or no. So we need a little bit more time this evening for that webinar. Is it okay for you? Then say yes or no, or shut up, then I will go. Okay, thanks a lot. Okay, so we see. First of all, look at this one. First of all, we start at the lowest point to draw. So you see movement. You have to wait until first. Rule number one is called you need a trend. So now you have to wait. You have to wait, and when the correction, you will see it's the end. And you see, look at this one. The balance candle shows you here. Look at this one. The balance candle shows you here, it's the end of the movement. It's so easy. It's so easy. And the balance candle in Heikin Ashi shows you, oh, the correction comes to an end. It's so easy. So now you can draw the correction. Do you have a valid trend right now? No, you don't, because you need a close above the last point 2 here. So now you have to wait. So that's what I mean when I say the correction is able to be brighter. So it's larger. So you see, or wider in that phase. It's a question of time. But the trend, we don't have a trend right now. So wait. Now you have a trend. Yeah, you see. Here you can see it. Right now, here you have the close be above the last point 2 or the last high. Now you have now you have a valid trend. And now it becomes really interesting. So wait. Next one. Wait. When the next correction will come. Here you have the correction. Wait. And now you see. Now you can draw it again. So now you have the last point 2 here. Now you can draw your correction. And you see, oh, there is the first. There's the first balance candle. You can see it here right now. And now, guys, now you are able to draw your Fibonacci. And now you can see, measure the last movement from the last low up to the last high. That means a lot of patience, I know, but that's the real challenge in trading. And now you can see, oh my God, we have a correction which ends at the 50% of Fibonacci, a little bit 61. So at that point, exactly at that point, you know your first target. It's so fucking easy right now. So you can see I have the correction ends right now, currently here. And now I know immediately before you start that trade, you need your first target because we said red to red. That's easy, guys. It brings so much calm in your trading. On the other hand, I know that's the challenge. It's taking place in your mind, guys. So now, how can I come into this trade? It's easy. If you see this balance candle, you make your stop buy order, a little bit space between the high. You make your order, your stop buy order here. And of course, your stop is placed below the previous point 3 here right now. And now, let's see what happened. So now you are inside in a trade. Oh my God. Emotion. Oh my God. It's gone. Oh, I'm in the plus. Oh my God. Oh, Jesus Christ. And now gone. You see. Oh, I'm in the plus. Oh, you know that emotion? You know it? I guess you know it. It's up and up. Oh, I'm so happy. Oh my God. Oh my God. The price come back. Oh my God. I lost everything. You know that? I know it from my previous time. I know it in my trading career. Today, I don't care about the shit stuff. It's a question of time and it's a question of trend. It's only a question of money management. But this is another topic. So the trend is still, your trade is still running. And we have our first target. You see, we have our first target. So we don't have, actually, be careful. It's really important about the trade management. So you see, the last high, the last point 2 is placed here. So for a trend continuation, guys, we need a close below that point, not the spike. The spike means they make a test. They make a test if some buyers will come into the market. If you see the spike, no more buyers. So, and now we have to wait because a trend continuation. You see, oh my God, we lost money. Oh my God, now, here we are. Now we see, you see, now that's the first candle. You see the close. What you can make with your stop now? Trail it. You can trail it to the next point 3 because you have a trend continuation now. And with a trend continuation, it's allowed to trail your stop the last point 3. You see, it's easy. And our target, oh my God, our target is placed here. Will we reach it? Will we reach it? Oh my God, the price come back. Oh my God, it's sideways face. Oh, it times. Oh my nerves. Oh my money. Fuck it, go back and go back. Oh, just so fuck that. Here we are. You see, it will take time at 14 December, maybe 7 p.m. and we'll reach the target 5 days later, 20. Guys, and now you can see, we can measure it, how many pips we reach. Here we are, you see it, first target, 178 pips. That means with one lot, almost 1,800 lots, or 180 with a mini lot. It's really, really easy. So let's go on. Let's go. I will bring you the proof that trend is almost, the trend continuation is almost more likely than a trend break. So let's see. Look at this one. Let's see. Assuming you were not inside here, maybe you missed it because you came later to the chart. Measure it and draw it again. Look at this one. Here we have the trend continuation. Not here because no close, no close. So here we have the last high. So, okay, let's do it. And here, let's see, sorry, that one. So now you see, measure with your Fibonacci this movement up to that point. So, and now you see the correction ends exactly again at the 61% of Fibonacci. So, do you have any balance candles? Yes, of course. Okay, it's in the middle of the night. It's a little bit stupid example, but I guess you understand what I want to show you. So you see balance candles here and here. Look at it. This is 12 noon. This is 12 o'clock. And here we have this balance candle, 9 o'clock. The balance candle must not be below the point, below the 38% Fibonacci. The correction as itself must be below, in that case, the 38%. So you see, we have that correction. And now that means, guys, that means again, that means red to red. So now we will see, it's here we are at 9 p.m. So we place our inside our stop buy order here, and you have the stop at the previous 0.3 here. And the first target, of course, is placed red, this correction, red to red. Let's see what happens. Let's see what, here we are. With that candle, you're inside. The trade is valid. The trade is still running. Now here we are. Oh my God, look at this one. Jesus Christ. 3 hours later, 3 or 4 hours later, you reach your first target. Guys, that's what I mean when I say that kind of trading. Dow, How, FIBO Pro. That's like Dow. How, the right now, how about Dow theory? A trend continuation is always more likely than a trend break. And Fibonacci is the human mathematic role in trading. And you can see, so how many pips we reach, we get here. Let's see, measure it again. So let's see again, 124. Oh my God, again, $124 again. You see the second time. And you see, I can go on and go on and go on. It's always the same. Look at this one. Let me see. Let me draw it again for you last time. Then I guess you understand what I mean. So you see movement, correction. So measure it. You know, at least 38%. You have a close below 38%? No, you don't. You don't have. So no trading chance there. So let's see here. But next one, you see, movement, correction. Now, measure it again and draw your Fibonacci. Draw it. You see. Oh my God. You see? Add blue. Now you know. And of course, you see, your first balance candle is here. 2 p.m. afternoon, or 2 hours later, a little bit stupid, but here, same time. And now you see the same situation. You have your stop buy here and your stop loss, in that case, very close at your previous point 3. Amazing, guys. Now you know your first target immediately because you see blue to blue. First target. Let's see what happened. You are inside. What happened? Look at this one. Look at this one. Look at this one. It reached again. Jesus Christ. And now you can see. Measure it. Look at this one again. Next. Almost the fourth number, 100 and what's that? 106 pips again. Guys, with one fucking trend, we made with that 3 trades almost 500 pips during almost maybe 1 week. Guys, that's so easy. So we can continue as long as you want. You look at this one. And now the price information. Look at this one. It's amazing. Let's see. Look where we started, in the green zone. That is high probability of trading. So that's a kind of trading. I know there exists a lot of approaches outside there, but you can see it's so easy. Look at this one. Maybe we forget volume. Look at this one. Last time. Look at this one. Movement, correction. Movement, correction. It's always the same, guys. Always the same. Look at this one. Measure it. Correction. Look at this one. And you see, what do you see? Red to red. Amazing. Amazing. Look at this one. Balance candle here. Another. Look at this. Damn. 427 points again. How many percent is the success rate on long term? 80%. 80%. Catch you tomorrow. Cheers. Bye, Bob. 80%. With this Dow How FIBO Pro, you can have a hit quote and a percent of round about 80% probability. That's really easy. Then you take out your first target, you take out the half a position, and the rest you trail your stop always by the last 0.3. So guys, thanks for your time. We are over 1 hour this time. Sorry for that, but I guess it was a special wish from you, and I hope you learned something in that case, and it was helpful and useful for you. We will see us tomorrow, maybe at 11 at Admiral Markets again, or maybe next week. Thanks for your time, guys. I wish you a very successful rest of the week. Have a nice evening. Thanks for your lifetime. I hope you will see us in our Dow How community. It will be a great pleasure to have you there and to educate you there and to guide you to your own trading access. Have a nice time. Bye-bye. Take care and enjoy the rest of your day.